Welcome, everyone. Thank you for joining us today for today's Zoom webinar, and thank you for those that are joining us on Facebook Live. We're happy to have you today. Back by a special return, I might say, are three speakers who have been with us through the PPP information, the rolling out and how to apply for forgiveness. There have been some updates and changes, and we're so happy to get to that. Thank you for being here. I'll introduce those speakers next, but before we do, let me tell you who I am. I'm Lori Berman. I'm Vice President of Membership and Development for the Small Business Association of Michigan. Thank you for being here today. If you have questions today about today's content, we ask that you put them in the Q&A features today. We will be monitoring that and helping answer your questions that you might have at the end of today's webinar. I do ask that you keep your questions focused to the PPP loan forgiveness information. If you have other questions, you can send those on to sbam@sbam.org. A recorded version of today's webinar will live on Zoom. We'll send that link out to you, and it'll also live on Facebook. So let's get going. Let me tell you about today's speakers. First, we have Leon Lebrecq. He is a JD, CPA, CFP, and a CFA. Leon's Chief Growth Officer of Sequoia Financial Group. Leon has invested more than 30 years in pursuit of one goal. It's enriching the lives of everyday people by helping them understand their financial lives. He spent countless hours serving his community as a speaker and author and a champion for causes such as the Hazel Park Promise. Also with us is James, we call him Jamie LePiccolo, CPA, CGMA, founder and managing member of Capcorp Professional Advisors, which is located in downtown Lake Orion. Jamie has over 30 years of public accounting experience, and he specializes in providing accounting, financial reporting, tax planning, tax preparation, and advisory services to closely help businesses and individuals. Jamie is also a board member of the Michigan Association of CPAs, which they've been an excellent partner introducing us to today's panel. I have one more thing to say about Jamie, and I've been notified that he was just selected as the Lake Orion Business Person of the Year. Congrats, Jamie.
Thank you very much.
Well done, Jamie. Yeah.
And last but not least, we have Bob Weens from Insights 3. Bob has extensive startup, business turnaround, and venture capital and triple bottom line strategy experience. He's a licensed CPA and attorney, earning his JD from the University of Michigan. And with that, I will let you take it away, Jamie.
Okay. Well, we're going to, Leon, I think, is going to go ahead and start to moderate this. And I think what we wanted to do today was welcome everybody. And I think we want to kind of keep this as a more of a conversation versus us doing a lecture type presentation to you. And really, if you've got any questions, please feel free to post them in the question and answer. We'll definitely make sure we address those. That's the whole point of this was to make this more about question and answer for the questions that you may have. We are going to go through a little bit of a slide deck that does cover some of just a little bit of a refresher course, if you will, and maybe some of the new stuff that we've some of the new rules that have come in place since our last presentation, and some of the major updates and so forth. So I'm going to let Leon hand it off to Leon so he can kind of moderate and go through this. If you've got any questions, please put it in the question and answer feature of Zoom, and we'll be monitoring that along with the chat feature. So Leon, I'll let you kind of go from there.
Thanks, Jamie. Bob and Jamie, good to be with you again. It's always great becoming experts in something that'll expire in about 62 days. So it's really fun for us to become experts in such things. We will want to probably comment a little bit on what the prospects are for future legislation. I think it looks right now that we aren't very promising. I would have had some optimism a week ago on the HEROES Act, but I think we're probably a little ways away from that. And if you haven't noticed, we only now have 7 days until the political ads are over, which will be really interesting. It'll give me time to go back and watch my favorite program, Schitt's Creek, which is where we kind of are already. So why don't we talk about this? I know Bob, I know you've been doing some forgiveness already. Jamie, you have too. Why don't we just go back, just a quick overview. What costs qualify for forgiveness and how we can go about on that? Bob, you want to hit that?
Let's just do a real quick overview on that. First of all, this is a refresher for everyone. for the PPP, remember there's two major areas that we can get forgiveness on. The loans were designed to give us dollars so we can, number one, cover payroll costs, which includes wealth, wages, health insurance, and retirement benefits, basically. And then we could spend up to 40% of the forgiveness amount for non-payroll costs. Those are basically rent costs, lease payments. Rent and lease are fine unless the rent or lease is to an owner employee. We can hit that later if we have questions on it. So if you happen to own the building and you're leasing it from your company to from yourself to your company, those rental or lease payments would not be forgivable. Utilities, mortgage interest, any sort of secured property loans, those would also, the interest on those would also be deductible. So big picture, PPP, if you remember, most of it's for payroll, 60%, but up to 40% can be for these non-payroll costs.
And Bob, you bring up the fact that leases, loans, and utility service agreements must have been in place by February 15th, before February 15th, 2020. It doesn't mean you have to use those numbers. It's during the period of time. I've had a lot of people get confused by that February 15th date. So
it basically means this. What they're looking for is they didn't want people coming out there and April 1st, after they got their PPP loan, entering into a new lease. That was not to be allowed. What they're saying, you could renew your lease. That wouldn't be an issue if you were moving from one facility to another. Could you effectively do a transfer? We don't know. Probably you could. It'd be something you'd want to discuss with your bank. What you clearly couldn't do is say, we're going to add another building on, and we're going to add a new lease to that. They're going to say, nope, if it wasn't in effect by February 15th, 2020, that will not be part of the forgivable dollar amounts.
Cool. Great. So we'll talk about final payroll.
Yeah, final payroll is just basically this. Keep this in mind. When you hit the end of your covered period, you don't have to do a hard payroll cutoff. So let's do this. Let's assume your covered period ends on October 5th. And you've got bi-weekly payroll periods that run, your last one runs from September 27th to October 10th. You can pay your payroll in the normal time periods, and you can still treat as the forgiveness amount, the payroll running from September 27th through October 5th. That would qualify, even though you paid it after your covered period expired. So keep in mind, just pay your payrolls in the normal, timely manner. You're going to have to do probably some sort of accrual for the final one to pick up the portion that's forgivable.
Okay, Jamie, you want to hit on owner, employees, self-employed, and general partners?
Yeah, so as part of the payroll cost for owners, self-employed, and general partners, the Treasury's come out with some guidance on this. They're going to allow for the 8-week is the $100,000 divided by, or the 8-week equivalent of $100,000 is $15,385. And then when they moved it to the 24-week, instead of allowing you 24 weeks, because of the owners borrowed at 2.5 months of compensation for the loan, they're going to allow it to cap at the 2.5 months or the lesser of whatever your 2.5 months of the 2019 compensation was. So for example, if you ended up paying your less than $100,000 in 2019, you're only going to get 2.5 months of that versus the 2.5 months of 100,000, which would have been the 20,833. So from that perspective, they're not allowing owners to get forgiven more than what they calculated the borrowing on. That's the simplest way that I look to try to remember that. And then they threw this caveat, and I'd like to get you guys' a little bit of opinion on this, but I think Treasury got this wrong personally. But they basically have said, at least for the S-Corp earners, that your health insurance is quote unquote part of payroll already. And so therefore it's excluded from the payroll calculation. And self-employed general partners, because of the fact that your compensation is your net income, and the health insurance is never deducted as part of that health income or that health insurance, they're all excluded from the health insurance component of this. Now, to me, the S-Corp is not necessarily added part of compensation. It is for tax purposes, but it's not necessarily part of their overall compensation. And I think that personally, I think Treasury got this one wrong. What do you think, Bob?
I agree with you. I understand their logic. Their logic was we're looking at the tax.
Or lack of?
Yeah. Under the tax rules, they're saying, hey, you've already got it in your W-2 or your 1099, whatever you're getting, your K-1. So they're going like, okay, since that's the numbers you're using for your compensation, it's already in there. So if we let you have it, you're effectively getting a double dip. So I look at it and I understand the logic behind it. And to be candid, we're stuck with the rules. Like it or not, it is reality. So if you're an S Corp owner who's it's 5% or more, isn't it, Jamie? If you're under 5%.
It's S Corp, it's 2% health.
2% for the health. Okay.
2%, 2% health. Yeah.
Okay.
Yep.
So if you're a 2% owner, or if you're self-employed or general partner, you got to exclude health insurance from your payroll cost calculation.
Yeah. I mean, the nice thing is the reality of the situation is, in my experience anyways, Bob, is that with them increasing from the 8 to 24 weeks, a lot of these little nuances that they've thrown in there are starting, and from what I've seen from the clients that I've started the prep of the preparation of the forgiveness, is that we've got way more expenses just in gross payroll alone before we start adding in all of these extra benefits for forgiveness. So I'm finding that like, even though the fact that if this was an 8-week issue, I think that this becomes a bigger issue to them. But looking at the 24-week cap, this becomes less of a significance to me.
I would agree. In fact, I only have one company right now that we've had to use anything but payroll, because everything was factored for 8 weeks. When it pushed out to 24 weeks, it wasn't an issue for them. They didn't have to look at any non-payroll costs, including they never looked at health insurance or anything else. It was just straight wages, which, if you can do it, is the best one. You're just submitting your payroll ledgers and your base and your your 941s and your 1028s, and you're really done with your documentation. So if you're using the 24-week period, try to keep it all within just the pure wages side. I think you'll be good. Where you could get stuck, where I have one client where they got hit by the 2.5 months limitation on their 2019 comp. How did they get that? They kept low comp. Their comp was only $60,000. So they're to pick up $5,000 a month. So they're capped at $12,500 instead of the $20,833. So it can sneak in on you. So just pay attention to it.
I agree with both of you. You want to try to get it on payroll if you can. It's the easiest audit. It's the easiest way through it. No question. We do go to non-payroll costs, same thing we've talked about before in some of these sessions, paid or incurred. Why don't we cover that? So gentlemen, whichever you'd like to hit on, paid or incurred.
This is one that I think Bob and I early on, we kept, this is the big debate, right? Bob was, what does it mean by paid and incurred? And we thought that it was going to be a cutoff, and the Treasury stuck in there and said that once the covered period starts, anything paid all the way through, and then you end the covered period. And then if you've got a bill that still wasn't unpaid, but was incurred during that covered period, and as long as you pay it by the normal course of payment by the next billing cycle, you'd be able to throw that back into the covered and use that as a covered expense. And Bob's got a good example here. Your period runs from May 1st to October 15. And so your electric is for April 15 to May 15, and May 24. That's forgivable because it was, even though it ended halfway in, or at the beginning of the covered period, and part of it covered, part of it didn't, it was paid on the 24th. And then on the back end, you've got this one going from October 1st to October 31st, and it was paid when it was due. You get a prorated from the 1st to the 15th. So the rent for May, though, in this case here, that was prepaid in April, because it was paid prior to May 1st, doesn't count. And as a suggestion here is ask the landlord for a refund of the rent and repay in May is one way to get around it. But there again, I'm seeing very little people needing to worry about all of this now that they've gone to the 24-week period.
Right.
So it's good information to know. I wouldn't be, like I'm doing a PPP now, and I'm not even looking at splitting hairs of anything afterwards. I'm just looking at it and saying, okay, I'm running all the reports from the covered period and saying, giving me all the expenses that were paid during this, and that's it. Because I'm not even going to need to get to this point. And Bob, I don't know if you mentioned earlier about the rent, and I think it's worth mentioning, even though again it's not a big deal, about the related party rent issue that came up. Oh, that came up at sometime in August or so, right?
Yeah, what the challenge was, and we've had, I'm sure, you've got clients too, where you've got an S corporation or an LLC, and it might have, one or two owners, and one of the owners or the group of owners own the buildings and individually, and they're renting them to their company. And so you'd say, well, gosh, if the company has a PPP loan and rent is a forgivable expense, well, I'm just going to pay the rent to the owner employees because they own the building, and I've got an enforceable lease. I get to treat that as a forgivable expense. But the SBA looked at it and said, no, we're going to kind of collapse that. If you're sitting out there and you are an owner employee, or you're an owner, I should say, and it's being paid to an owner, the rent, it is not forgivable. So long and short of it is, you've got that scenario, don't throw it into your forgivable non-payroll costs. You're just going to throw yourself into a challenge environment. And as soon as you do that with the bank, they're going to start scrutinizing everything else.
But they're going to allow the interest, if the building's got an underlying mortgage, that interest is able to be claimed as mortgage interest.
Yeah, why don't you hit that? Because that's an excellent.
Yeah, so they really, and I wish I had recorded this early on, because when they're going through this, I said this exact same thing, that they were going to basically look through the related party and say, we're going to almost treat it as a consolidation and eliminate the rent, and then whatever's left over, meaning that if that rental company has mortgaged the building and has got a loan on it, a mortgage loan, that interest will be thrown into the PPP as in lieu of the rent. So you still get something for that, but you don't. So those that have the building paid off free and clear are going to get no benefit. Those that have a mortgage will be able to use the interest as the mortgage interest on that. So
yeah, good point.
So Jamie and Bob, that attribution is on 2% or greater owners, right?
Yeah.
Yeah.
Okay. All right. Cool.
One just a kind of a background. When we prepared these slides for everyone who's looking at them, anything in white is kind of the old rules. The stuff that's in green that we've got here are the most recent changes. So if you're going
like this slide with green on it.
Yes, look at the exciting green. Yeah.
Wow, exciting green.
I know.
Great.
It's the pre-holiday season. We're already thinking about Christmas.
Right, we're doing blue and green. That's just like, what holiday is that? I'm just curious. So
I think it's baklavas. Yeah, baklavas.
Baklava day.
Yeah.
So they did change the due date for application filing, and plus there's also the amount of time it goes to the bank and the amount of time it goes to the SBA. Jamie, you want to hit on that?
Yeah. So what's happening now is you've got 10 months from the end of the covered period to apply for forgiveness. So most of the people, that 24 weeks is ending right about now, and so we've got about another 10 months. So that realistically puts us into August by the time that we have to submit it to the bank. Then after that, the bank has got 60 days to review and come back to you with a determination on the forgiveness amount. Then what the bank does is they submit it to the SBA, and the SBA, I think, has got, is it 90 days, I believe, after that?
It's 90, yes. Yeah.
To come back to the bank and quote unquote pay the bank back the forgiveness amount, and then the bank has to notify you what they've been paid by the SBA. So the reality is you could go 10 months, and then you've got another basically 150 days before you know if forgiveness is effectively granted or not. You'll have a preliminary in within 60 days, but then you've got the SBA to do its final blessing. So
it could theoretically be in 2022.
It could be 2022. It theoretically very much could be, which throws out a whole host of questions. And this is where, what I've been trying to tell people right now is let's hold off on let's get it ready, but let's hold off, because we still don't know what's going to happen when it straddles different years. You've already got people that have done fiscal years and so forth. And when do we, what calendar, what tax year do we put in the forgiveness? Or what?
So I got a question. I'm going to bring my monkey wrench out because
Yep.
I talked to the drafters of Rev Notice 2020-32.
Okay.
And I said, okay, got a simple question for you. If the forgiveness amount isn't taxable, we know that, and you're saying the expenses paid with forgiven PPP loan proceeds are not deductible. Well, we don't know that they're forgiven until we get forgiveness.
Right.
I'm taking the AICPA position. I'm asking you two what you think. I mean, you guys are smart CPAs. I think the AICPA's position is, the deductibility is when it's paid and then it becomes not deductible on a subsequent date. I mean, there's a really interesting question, and I'll throw one giant monkey wrench in there. I know you probably don't know this, but in 7 days, we're having an election. And it could be possible that the QBI rules would go away by 2022 or 2023. It's completely possible the maximum corporate tax rate could be 28% instead of 21%. It's completely possible that the maximum individual tax rate would be 39.6. Doesn't this go to my assortment of Leon Lebrecht Lowe's monkey wrenches that get thrown into the works and ask you, what do you tell your client? How do we go about doing this? And I'm telling people, Jamie and Bob, hey, delay it, at least delay it toward the end of the year to get the application in. And up until that point, you can then decide next year to deduct it or not deduct it. You'll know when your forgiveness has taken place. I don't know. This is probably the biggest thing that gives me, extraordinary, agita in my, my indigestion is what this rule is really coming out to say. And by the way, I think they got it wrong. I think the IRS got it right, but I think Congress should have just told them, look, we meant for the expenses to be deductible. And had the HEROES Act passed, we probably would have got them deductible.
Yeah. Now, you've nailed a problem sitting out there and there's no good answer to it. And just as background for everyone, let's assume that we have a PPP loan in 2020 for $50,000. It's all forgivable. We apply for the forgiveness and it's forgiven in 2021. Well, that means in 2021, we suddenly converted a $50,000 loan. It's forgiven, so it just effectively becomes equity to us. It's other income, which is not taxable. But think about it. What did we do? We spent those $50,000, which we received in 2020, for deductible expenses in 2020. And we probably deducted those on our 2020 tax returns because we should have. We basically used borrowed funds, happen to be PPP loan funds, to pay those expenses, i.e. our payroll. Now we find out in 2021 that it's forgiven. So now we have to go back and amend our 2020 return and say, you know what? Our 2020, we have to now reduce the deductions by $50,000. It's going to create a lot of turmoil.
So I'll answer a question to my two smart colleagues. What Internal Revenue Code section mandates that you amend your return?
There is not one.
There is not one. Yes.
That's
the tax attorney talking now, not the CPA. The CPA would say, oh my God, oh, you must do it exactly right. The tax attorney would say, wait a minute, there's a hole here that I could stick something in.
And we have to remember as CPAs, our professional standard is all we have to do is inform the client that they should amend their return, and then it goes to the ethical of client acceptance and so forth of a client that doesn't want to follow the tax law, right? But
then it goes to us attorneys, which would say, well, you're not required.
Right. And then us attorneys will say, by the way, pay us, and we'll tell you why you don't. So
I'm outnumbered on this one, right? But I absolutely, this is going to become a quagmire, and I look at this and go, I surely don't want to subject my clients to audit or review, but it's a very, very interesting situation of the way that they've done this now, that forgiveness is going to happen. Most forgiveness is going to happen in 2021. And what do we do? Do we file a tax return immediately and say we had no forgiveness and then worry about I think that is going to be a viable option for people. It's going to be a risky option because I think the IRS is going to be looking for that and going to be, taking a position that's going to have to be challenged in court, I think. And so part of me says is, this is where it's all becomes a wait and see now. this is the regulations that I think we've all been waiting for Congress to, or somebody to come down and let's just end this. Let's figure out where, because this is realistic. You've already got people that have got June year ends or anything, and they still don't know where to do with it.
Yeah.
So this is a big problem. I really think it is. And like you said, Bob or Leon, what do we do about an election coming up and the potential of undoing the TCGA and all of the QBI and all of these other things and tax rates going up and things of that nature? How does this come to an impact? And I don't think there's enough Tums in my house to really kind of get through this right now, to be honest with you. But yeah, it's a challenge.
I have a slight silver lining. I have the unenviable position of talking to DC on a regular basis. And for a little while, it looked like we were going to get a reenactment of just PPP prior to the election. Obviously, I'm handicapping that as a no right now. But given that was in there, it appeared they were going to put the HEROES Act provisions in and clarify this issue. So it did appear. And by the way, for everybody on the call, there's still 137 billion that wasn't used for PPP or some number like that. You know, billion here, billion there, real numbers eventually add up. But there's still a lot of money that hasn't been taken by PPP. So I would say post-election, you could see a whole new set of stimulus. You could see a whole new set of things coming in. My sources now are telling me you'll see that in early January of 2021. So this may be, take your deductions, don't file for forgiveness until 2021. I actually been telling people, do the application after 2021. That actually builds your fact situation even a little bit better because you got 10 months to file, you know.
Yeah.
And
that way you don't even know
what you're going to do in 2021.
Right.
Yeah.
Yeah. No, I mean, it's gonna, and Leon, I've heard the same thing. I had the fortune of sitting in on a presentation from the AICPA regarding they had their chief legislative affairs officer speaking, and he seems to think that there's 3 things that are going to be coming in the new package potentially. And you can tell me if some of these are now dead on arrival. This was last week. But
that's why I watched the same one, Jamie. Yeah.
Yeah, that they're expanding the PPP to include, some nonprofits, and they're going to be expansion. There's going to be $150,000 for automatic forgiveness, and that they're going to make the expenses deductible.
I've heard the same thing. Yeah,
that's what I've heard. Okay,
I've heard the same thing. Yep. All the folks, generally all the folks I talk to are either running for re-election or running with somebody else who's running for re-election, or running for somebody who's running for election. So right now it's impossible to get any straight answers. I think we'll know more probably December 31st when we figure out who won the election. But we'll go from there.
So there's a question up there, Leon. I don't know if you want to address it now or
read it off for me. I'm
okay.
playing.
So it says this is from Chris. It says, "Have a buyer for my dental practice, and the closing date is December 1st. I've been told by my accountant to apply for forgiveness right away, so it does not interfere with the sale of the building and business. Should I do as?" And then he asks follow-up. Should I do as my accountant recommends and apply now for forgiveness? I've got my thoughts, and I think part of this, Chris, is going to depend on how the deal is structured. If you're selling your assets, then the forgiveness and everything, your corporation or your company, your dental practice still exists. It just exists with no assets, including the debt and the forgiveness and all of that. So I don't think where it would interfere with that. Now, if you're selling the ownership or the stock, then that's going to be something that forgiveness, I think, will inherit. The new owner will inherit. Isn't that right? And that would be my logic, because you've got an asset sale versus a stock sale.
I saw the change in ownership rules. I think you guys have seen those too. It seems, Jamie, your reasoning is well thought out. If it was an asset sale, it wouldn't matter as much. If it was a stock sale, which I doubt you do in a dental practice, but it's possible.
Yeah.
Right.
If you actually sold the stock, I would accelerate the application. Bob, what do you think?
Yeah, I agree. I can't imagine anyone would be doing a stock sale for a professional company with a liability pass through. But yeah.
Yeah. I mean, like I said, I think that it's just but yeah, I mean, so as one CPA to another, yeah, if you feel comfortable with if you trust your accountant, you should do as your accountant says. I think that the common wisdom, you're in special circumstances, Chris. So, but the general rule is that we're recommending to most of our clients, let's wait and see where Congress comes on this. And there's still final rules that need to be done. So.
Yep. As you alluded to, Jamie, there's a possibility this number will be 150, but right now, if they're 50 grand or less, You don't have any forgiveness reductions for layoffs or wage cuts. You file a 3508S and you're home free.
Yeah,
Mhm.
this was great. I mean, this was very, this was just great. I mean, there's a sense of giving some clarity on some of this stuff and this would be probably the only exception to, filing early would be to possibly because you already know it's going to be forgiven and just, this is kind of automatic now. So anybody under 50 is automatically guaranteed for forgiveness. So this might be that exception to that rule of waiting, because I think you would have a harder argument to say, well, I didn't know I was going to be forgiven or not. They've essentially said that there's no reductions or anything, so your loan is completely forgiven. And I would just take the forgiveness in 2020 and offset the expenses at that point, shy of waiting for Congress maybe to make them deductible.
When what's good about that too, Jamie, if you take that approach, is you don't have to file your tax return until 2021. By then, we would have clarity on the deductibility. So you may get a little extra Christmas present that says the HEROES Act comes in and
Right.
puts it in play.
Which I think, Leon, they're talking about how do we provide more stimulus to our businesses and so forth. Make these expenses deductible. That's almost an immediate impact without having to send checks or do anything funny. It's just make the expenses deductible as is, and it's a very simple way to, you look at S corps and at the highest rate, 37%. It puts 37% money back into their pocket on this, and so I just see this as a way to really get the stimulus going if they're looking to help small businesses again.
Well, not only that, Jamie, a lot of small businesses are suffering in this pandemic. So
Yeah. Yep.
It's not costing them 37%. It's just giving them the benefit. It may be an NOL or something like that, but it's certainly,
Right. Future down the road. Right.
I first of all, policy wise, you're preaching to the choir. I agree with you. And I thought the statement in the act when they originally passed the CARES Act was they intended it to be deductible by the statement is tax free. The IRS, however, interpreted 265 probably as a college professor correctly, and Congress has sat on their hands and bickered with each other instead of fixing it. That's I'm going to blame 535 people as opposed to blaming the entire IRS. So
Yeah.
I'm right with you, Leon.
yeah.
Yeah, Chris, you know what, Chris, maybe I'll follow up with you later, or because he asked, even it says it's an asset sale, even the bank says file now. The bank you may have some other loans and circumstances in there. Chris, if you want to reach out to either one of us after the fact, maybe we could walk you through it. But if everybody's telling you to file and you trust your advisors, to go ahead and file.
And I agree with that, especially I think, Leon, you got a great observation. It's not due till next year, the return. So we've got enough time to see what the legislation is going to do.
Yeah,
So,
we'll know.
Yep.
I think we will know. I mean, I see two scenarios here, and I see, post-election, one way we would get a modest stimulus package. And then if we get the election going another way, we might get a gigantic stimulus package. In any event, they're going to readdress PPP because the small business contingent is important to all parties. And, it's important to both political parties, and they really want it to work. So I think we'll see something for sure.
Yep.
If the loans are greater than 50 grand, why don't you guys run through this, please?
Go ahead, Bob.
Sure. Basically, it's saying that the old safe harbor, if you're above 50,000, still applies. So if you laid off staff between February 15th and April 26th, and you restore the number of headcount by the end of the year, December 31st, you can ignore all those layoffs. So above 50,000, that still applies. There's another situation where you could ignore reductions in your headcount. So if you look at your February 15th headcount, your FTE level, and you've had to reduce it, and you cannot bring those staff back on because of COVID-19 rules regarding health and safety guidelines, and those rules have to be issued by the HHS, CDC, or OSHA, then at that point in time, you're also exempt from bringing those people back. So quick example, I've got 50 employees. I had to reduce it due to COVID-19 down to 20. Because of, let's say, social distancing and other rules for my facility, I can only bring back 10. So now I've gone from 50 to 30. The 20 that I've lost, I can ignore. I do not have to treat those as reductions in my headcount, but I have to be able to document that The reason I couldn't bring them back is I had to comply with health and safety guidelines issued by HHS, CDC, or OSHA regarding COVID-19. So not a real easy thing for many of us to do, to be candid, especially if you're in a professional environment where you can work remotely. But if you're in a manufacturing, if you're in a distribution, et cetera, it could well be. You're going to find that.
So Jamie, you had an interesting one when we did some of our previous ones before these rules got a little bit more clarified. What if I had, you know, a relatively small number of people? Say I had 4 people before the pandemic, then I laid off 2. And let's say I brought 2 back by December 31st. Am I okay?
So you only had 2, so you started with 4, laid off 2, and you brought those two new people back?
Or I brought 2 people back. I couldn't get the 2 to come back. One got another job, one moved to Albuquerque, but I found 2 others to come in. Am I okay?
As long you can, there's another safe harbor that we haven't talked about yet, but under these rules, you may experience a reduction because you haven't brought it back to that February 15th level. Now, if you've done everything and documented and tried and you just couldn't find any qualified people,
yeah,
right here.
If I said I can't find anybody, then I'm probably
right. But you have to be able to. The biggest issue is going to be you're going to have to document this. You can't just say, "Oh well, I didn't find anybody," and not try. You have to at least show that you've tried to do that. And I think that, you know, I can't drive up like Orion. I can't drive up and down M24 without seeing a forced, looking to hire signs all over the place. So, that's. So I got to imagine that this is going to be a tough one to find, because I've got to imagine you should be able to find somebody to maybe fill. Now, if they're not qualified or whatever, you may be able to be okay. I usually trying to advise my clients, just get back to that number, just so that way there's no issue relative to the banks questioning it. And this is another point that we have is some people may wait till December 31st to apply for their application. This goes into the delaying of that submitting that application. You've got till December 31st to find out if you've restored your employment or not.
Right. So go play with your calculator and figure it out, right?
Yeah. And Bob, have you, in your experience, everybody that I've done so far that I've walked through, we've been able to maintain full FTE. We have not had any reductions so far. I've not run into anybody that's really, cut back enough to or at the safe harbor. What about you? Have you seen where we've got some?
I only have one scenario. They're a large Ford tier 1 supplier, and out of their whole staff, it came out to be 0.03% they couldn't bring back.
Okay.
So, I mean, it was infinitesimal. So it was like, I'm not even going to chase it. We looked at it, they said, no. By the time we looked at the professional fees, we're trying to figure it out. I was like, just pay it.
Yeah. We've got a couple more questions here. We've got Janet. We are a church nonprofit and do not normally have any IRS business income to file. Any suggestions? We used all the PP funds for payroll. I'm assuming this relates to, how soon she should file. Assuming, my thought would be, Janet, assuming that you've met the full-time you don't have any FTE reductions or anything like that, and you used all the funds, and you're going to get 100% forgiveness. I don't think you have the deductibility issue. I would file whenever you're ready to file.
I'm in complete agreement.
Total agreement.
There's a scenario also. Let's assume that your PPP period isn't going to expire for another 3 weeks, but you don't have any FTE reductions today, but you might in another week or 2. File today.
Do it now. Yeah. Before everybody gets laid off. Right.
Yeah. What you need, I've got one client that we did it on purpose. We went through, after 12 weeks, they had fully expended all their funds. So at that point, we applied immediately because we didn't reduce anyone's payroll, didn't reduce anyone's hours. We kept them all stable. And then after we applied, everyone knew it was coming. We then reduced some hours. But as far as we were concerned, there was no FTE reductions because for the full period, through the time we filed, we had 0 reductions. The reductions came afterwards, but that's allowed.
Hey guys, I got a question for you.
Sure.
There's only about 600,000 applicants that are above 150 grand. How do you think the SBA is going to get through all these in 90 days?
They're not.
Why they've got the 50,000 rule. That's, I mean, that eliminates about 50% of them at least. I think I saw 50 to 60% of the loans are under 50 grand. So I think that clears a good chunk of them out right there. And then you're looking at the everybody else. So I think that's why they picked that. I mean, to them, they're calling $50,000 de minimis.
Yeah, I think they're going to change it. They're going to change it to $1.50. I think they are.
I think so too. I think that I think my opinion is they knew they needed to have this some sort of a de minimis number. And I don't think they were willing to go to 150. I think, but they wanted Congress to act. So they kind of threw something out and said, okay, Congress, it's your move now. We're saying 50. If you don't like that number, then you make it whatever. Yeah, give us another one. That's how I think that there's a love-hate between Treasury and Congress, I think, going on right now.
Let's give our listeners a little background. If you're thinking about what happened is the CARES Act said that the SBA and the Treasury can make minor adjustments. So if it's de minimis, it's not really a big impact. They gave them the administrative authority to bend or change the rules. Right. So when they looked at it, they said, you know what, if it's 50,000 or less for your loan, we're going to treat that as de minimis because dollar-wise, I think, even though number of loans may have been half, dollar-wise, it was under 20% of the total amount of loans. Right. So they said, that's de minimis. We're good with that. But they couldn't push it to the 150,000 and below because that would have been very significant. They couldn't stretch it to say, well, listen, that's de minimis, so we have the authority to do it. That's why that 150 threshold, you got to go back to Congress for.
Yep. Right. I got another question that came in through chat. This is through Facebook online, I guess. And this is a technical question, so I don't know if under Section 403C of the CARES Act, it states, until 12 months after the direct loan is no longer outstanding, such eligible business shall not pay dividends or make any capital distributions with respect to, I think, common stock of such eligible business. Does this apply to the PPP loans? So no distributions, dividends while the loan is outstanding? I don't recall that as part of any of the conditions under the PPP. I know that the EIDL loan has something relative to bonuses and distributions while the loan is outstanding. But I don't recall anything in reviewing any of the PP documents that I've seen.
That's ringing a bell to me, Bob. Do you know on the EIDL?
No, it's pretty. In the EIDL. It's a great question. It piques my interest. So why don't you guys keep going forward? And I'm just going to see if I can find anything on that. You just
So it's in the chat, Bob, so you can see the exact question if you can open up the chat.
Yeah, it's just CARES Act Section 403C.
403C. Yeah, I don't know if there's a 4003 or if it's 403.
Yeah. It's 403C3A1 2 little I. So
okay,
Jamie, let's talk about the filings and what to file. So the banks are going to give you an online form. You guys have already dealt with some of those. We talked about the short form, the 3508S. Tell me about the 3508EZ.
So they've broken out now to three applications. The yes, we talked about. The EZ is kind of basically saying that if you're self-employed and or you've had no reductions, and we've talked about the reductions, the 25% drop in wages or salary or hourly wages, or no reduction in the number of FTEs or number of employees from the first to the end of the covered period compared to the, so as long as, if you've made no changes relative to your payroll, you've paid everybody through, I mean, the best way I'm going to say this is if you've maintained from the date that you received the funds until the end of the covered period, chances are you're going to be able to go with the easy form. If you've seen if you reduced anything, if you reduced your head count, if you reduced people's pay, you're going to have to go the long form because you're going to have to calculate what the impact of those reductions are. So the first thing, as a practicality, the first thing that I've always done now is I'm working with my clients is we're looking at calculating that reference period of FTEs. We're looking back into if you remember, that was from February 15th, 2019 to June 30th, 2019. or January 1st, 2020 to February 29th, 2020. You look at your FTE count there, and then you compare it to the covered period. That's the first thing I do, because chances are you haven't reduced people's pay as a sense of their hourly rate. You're not dropping them from $15 an hour to $10 an hour. Most people were keeping them the same. But assuming that you kept that then lets me know what avenue we're working on, if we're looking at the easy or if we're looking at the full form, because now you've got to go through and do the calculations.
Right. So if I kept everybody, I didn't lower the pay by more than 25%, or I can't operate because of certain CDC guidelines, I'm kind of okay to use the easy form, which is a better form. Right?
Yep.
Okay, cool.
I'm looking at the 4003. Yeah, that's not applying to the PPP world.
Oh, good.
That's under it's a Stabilization Act portion. And in there, they're looking at basically.
Wasn't it airlines and stuff?
Yeah, it's the $454 billion they put together, which was looked at. These were the Federal Reserve funds that they could loan. So it's not part of the PPP program. It's a great question.
This was Delta and some of the cargo
Part
carriers.
of it, under 4003B was the Delta stuff, the air carriers, et cetera, the 25 billion there, the 4 billion for air cargo. Yeah, so it's a great question, but it's not going to be, it won't be hitting us under the PPP. Good question.
I've got 3 questions that came in. So before we move on to this, Michelle is asking, what are the chances if you're slightly over the exemption amount that you still apply for forgiveness and use the 50,000 rule? Is that a decision for the bank or SBA, or not worth asking? I'm assuming the exemption amount is the $50,000. I think that's, if you're over the 50, you can't use the simple form. I think that's just an SBA rule. I don't think that's really a decision the banks can make. I think that's what you're asking, Michelle. If it's not, do me a favor, resubmit the question in a different.
Yeah, if it's 53,000, Michelle, you can't get the 50,000. So you can't get the forgiveness for 50. I think that's a hard line.
I'm going to throw this next one by Mary to Bob, because Bob loves these little twisters. If my only reduction is a head count as a result of one person retiring, how does that impact my head count calculation? Does this count as a reduction?
That's a great question. Actually, I think it's not going to be a reduction, and the reason it's not is going to be that's a voluntary termination. They quit.
Yep.
They quit. They voluntarily resigned. They retired.
I think I agree with you guys on that one.
I went back to our slide 10 on that, Mary. So
yeah, and we will make these slides available to you guys. So when you're really bored, or if you've got guests that come over for dinner and you want them to leave early, just pull them out. It works wonders.
Yeah, or there's door-to-door solicitors. Tell them.
You invite them in.
So
come look at the slideshow.
I've got one more that came in from Kathleen. I had one person move in the last 2 weeks of our 24-week term since distribution, but before 12/31. Can I file the easy form? I'm assuming moving in I guess I'm not sure what you mean by move in. Is that somebody?
I'm perceiving that she's saying she hired the person. I think that's what she.
Right.
So
got it.
I guess Kathleen, we need to get a little bit more, because I don't know if we've got a drop in. Did she have a drop prior to and then brought somebody back in? You can use the easy form as long as you stay below or stay at the numbers you started with. And if you go higher, you can still use the easy form. It's when you drop and then come back. I think that you have to use you're going to have to use the full form, because you're going to have to go through the safe harbor calculations on the long form.
I think you're right. Yeah. That's where you are. I think the easy form is designed for people that say, hey, I didn't give anyone a wage cut of more than 25%, and there was no reduction in the number of employees or average hours paid. So I didn't reduce hours, didn't cut head count. I may have reduced comp less than 25%, but as long as I kept that stable from January 1st to the end of my covered period, then I just do the easy. If I dipped below, I laid some people off, or I reduced comp and then brought them back up before the end of my covered period or December 31st, then I'm stuck with the full form.
I want to get to one more. Lydia's asking on Facebook, I have PPP and idle advance, but no idle loan. Is there any scenario where the idle advance doesn't get deducted from my PPP? no overlap in funds were used. I think that, no, I think there is no scenario. I think that it's a reduction. The advance is a direct reduction.
That's how I read it. It's a reduction.
They
Yeah,
treat
there's
it as part of your prepayment. So if your loan was for 40,000 and you have a $3,000 idle grant, I'll call it the EEIG, then what they're going to do when you're all done is say, oh, we have 40,000. They're going to then treat it as if a 3,000 is going to then not be forgiven. Yeah. Because they'll say that amount, that EEIG grant was not forgivable. So now you've got a $3,000 loan with the great payment terms and great interest of the PPP loan. So if you want to pay it off right away. If you don't want to, no big deal. You got a great loan.
Mary, I agree with you. That's a good analysis, Bob. Mary, we've got a couple follow up on the questions. Mary is saying the one that had the retiree, can I use an easy form because my retiree doesn't count as a headcount reduction? I believe she would be able to.
I think so too.
Yeah. Mm-hmm. Okay. And then Catherine is, how do we address people that voluntarily leave on the easy form? In other words, our FTE is reduced by qualified reasons. I think it's just part of the certifications that you make. I don't think that there's no calculation. You're just certifying that you've met the requirements under the easy form, which you are. I think is question number 1 of the certification. If I look at the certification form.
Yep.
Okay.
It's the one where you submit they get your first maleborn child if you
lie and everything.
So I immediately said I lied.
Yeah, exactly.
And I gave them the address.
Yeah. Take them.
That's right.
Yeah. Please take them.
That's right.
Okay. All right. Good. Let's continue on.
Well, we're on submitted docs. And obviously, the most common one you're going to do is payroll. So you're going to have a bank account statement for your covered payroll or your payroll service reports and your filings, as Bob said, the 941s and the 1028s. In a lot of cases, that'll be enough to get documentation, I would think.
Yeah, if you're using a payroll service, that's going to be your verifications. You're pretty much done.
Yeah, SBA has said that they're gonna allow for third party to be submitted. You don't even have to do any calculations or anything along those lines. So that makes it very, very simple.
Yeah.
Okay. And then Jamie, you've already alluded to the reference period of the FTE. So
yeah,
you submit your reference period of the FTE.
Yep.
And again, using 941s and 1028s for the reference period. And then Bob, what about non-payroll stuff?
Non-payroll stuff is what we talked about earlier, Leon, where basically if it's non-payroll, if they're for loans, leases, utilities, you're supposed to show that those were all in place by February 15th. So you'd have to show them a copy of the loan agreement, lease agreement, or a utility bill that occurred before February 15th. So they know that service was in place. And then you have to provide to them show proof that you made payments according to the loan agreement, lease agreement.
So cancel checks or receipts or whatever.
Yep. Cancel checks would be perfect.
Not that big a deal.
And as a practical approach, I'm doing one now for a client and we're gathering the documentation and they use QuickBooks for a lot of their accounting. I'll be honest, for all of the non-payroll, because the payroll and the FTE or the payroll side really got most of or all of the forgiveness. Mm-hmm. We're putting the numbers down, but we're just giving them registers and the bank statements. And really, my thought is the bank, if they want to really go after it, the bank can let us know, but we don't need these non-payroll costs. So I'm not doing a whole looking up all of the bills and things like that. It's not a lot of money, and it has very little, if any, impact to it. So, for those that are on there that are going to be doing this themselves, see what you've got on the payroll and don't stress on the document side on the non-payroll, especially if your payroll meets 100% of the forgiveness number.
Yeah. In fact, my attitude is the ones I filed, if the payroll met 100%, I didn't include anything for non-payroll.
Yeah.
You don't need to.
I'm debating that.
Do the easy stuff.
Yeah, I'm debating on that on the one client that I'm working on now is whether I just back that all off or, but I'm also running through the application program right now just to see how it works and stuff. So
sure. Well, we're sick individuals. We're CPAs, so we like to.
Yeah, it's a little bit. Yeah. There's a line in it. I've got to put a number on that line, right?
That's right. Yeah.
I got to put something there. Yeah.
In this situation, you can say 0 because you're not asking for anything on it.
Right.
It's always fun to plug the number in.
These are things that everyone should keep. They should obviously keep documentation on listing of each employee on the Schedule A work. They should keep their firing for cause or their inability to hire people back. If there's any kind of guidelines, they need to do that. The documentation supporting their FTE, their loan app, and the documentation demonstrating the PPP requirements. So there you go. More things you're supposed to keep for 6 years. Isn't that?
Mhm.
Yeah. So guys, we're rolling on to the end of our thing. You want to just do one example? Shall we roll through an example?
Okay.
Yeah, Bob.
This
Go ahead,
one's
Bob.
this is a pain, and we'll go through it quickly. What I really want to emphasize here is that if you don't need to do non-payroll, don't do non-payroll. If you do non-payroll, and make sure that the total amount that you do for non-payroll is less 40% or less than the total amount being forgiven. If not, you're going to have this weird scenario. Let's go through it. So the borrower received a $100,000 PPP loan, and they spend $54,000 on payroll and $46,000 on non-payroll forgivable costs. So they spent 46% instead of 40% for non-payroll. So at this point in time, what happens, we'll just read it so you can see it. The borrower's non-payroll cost cap is 40% of the loan, is reduced by the same percentage as the borrower fell short of the 60% of the loan for qualifying payroll costs. So we'll call that the 60% test. So in our example, the borrower's payroll cost minimum is $60,000. They have to pay 60% times 100,000. However, our borrower only spent 90% of the $60,000. So they spent 54 divided by the 60,000 is the 90%. Hence, the borrower can only be forgiven 90% of the non-payroll costs. So that means we're going to multiply 90% times, in this situation, 40,000, and that's going to give them 36,000. So if you look down below, you can say they spent 54,000 in payroll costs. The amount of the payroll costs that will be forgiven is 54,000. They spent $46,000 in non-payroll costs, but the most they can be forgiven is 40% of the 40,000, and that's 36,000. So instead of getting the full amount of 100,000, they're going to get 90,000, the 54 plus 36.
So Bob, I'm going to make fun of this is the attorney explanation, right? It's the other side of it is take $54,000 of which is spent on payroll divided by 0.6, and that's the most that you're going to be able to, your loan is going to be able to be forgiven.
Don't make it that easy. Come on.
Come on. Bob's being an attorney. He has to go through a explanation.
This is the attorney.
He's going to be a
versus
CPA. He's
right?
going to say that's how it goes.
That's right. All right.
So,
Yeah.
well, guys.
Yours is better.
Yeah. So it's been great being with everybody on the SBA program. I think, Bob, you've got to drop off at 2. Lori, I think we have kind of a hard stop. We would love to answer any further questions. If you got them through SBAM, we'd be happy to do that. Hopefully this stuff is useful to everyone out there. And hopefully this was beneficial. We don't have any fun, obviously, the three of us.
No.
Well, I enjoy your wit and your knowledge, and I appreciate you sifting through some of these unique questions that we've had. Our members really appreciate all that you're doing for them. So thank you so much. If you'd send the slides, we'll put the slides and the recording out there. I think we've answered all the questions that came through on Facebook. And thank you.
I like a new office.
Yeah, you like my new office?
I do. Very nice.
Oh, you moved since the start of this.
Are you moving on November 3rd?
I am. I'm moving.
January 20th. That's right.
I'll re-up the PPP.
Automatically, Leon.
I'll make it deductible. I promise.
Okay, here we go. Here we go.
That's awesome.
All right. Well, thanks to everyone. Thanks to everyone that joined us on Facebook and Zoom as well. Thank you to our panelists.
Thank you.
Yeah.
All right, guys.
Thanks, everybody.
Thank you very much. All right. Bye, guys. Thanks for joining. Bye-bye.
Bye.